You've been in the market for like 10 plus years. Nothing really clicked to the point where you could consistently make money. Went into crypto, experienced the volatility, and then come back and made $500,000. Like what happened?
Zero DTs were not working for me. But if I traded even just like 3 or 5 data expiration options, my success rate went up a lot. I'm pretty comfortable sharing this strategy. One of my main strategies is to
Welcome to Undiscovered Traders, the podcast that focuses on the charts, stats, and edge of the latest 6 going on 7-figure traders. Today we're talking to Zune. He's up $320,000 in the last 12 months, almost $500,000 lifetime. Options trader and equities, I believe. How are you?
Hi, thanks for having me. I'm doing well. Glad to be here.
And tell me a little bit about you, about yourself, what you feel comfortable to say, and also how you got into trading, and then we'll get into your profit chart in a little bit.
Yeah. I started I initially started trading in 2011. So almost 15 years now, 14, 15 years. And the first 10 years I was pretty much just blowing out accounts. Learning a lot. I wasn't consistent. I made some money some years, lost some other years, but I was also working a full-time job, and I didn't get consistently profitable until maybe 2019, 2020. And even then it was not really big profits, kind of below 5 figures. And I quit my job in finance in 2020 to pursue entrepreneurship. I got into affiliate marketing and running some online businesses. And then I also got into crypto and Bitcoin and really dove into that for the better part of 2020 through 2023, I want to say. And yeah, I was doing a lot in there. I was working freelance for some crypto startups. Um, there was a lot of funding in that space for VC funding, and yeah, did relatively well. But in 2022, if you ever followed crypto, everything crashed with FTX and Terra Luna, and um, I did pretty well the first 2 years, and then I would say like a good amount of those gains just disappeared after. So came out unscathed, but also it's one of those things where, when you're trading and stuff, if you make 1 million and you lose 1 million, you feel like you lost 1 million, right? And so I got back to my roots in trading equities, and what I found was that I gained a lot of risk tolerance from being in crypto, because you're dealing with like crazy ups and downs, like triple digit percentages. And when I got back into stocks, it actually felt kind of boring. 1%, 2% moves. And so I think I because of that, I started being able to like really trade equities and options with more objectivity, without kind of just being scared of every single tick. And yeah, that's sort of how I uh my a little bit of my journey.
Yeah, but I mean it's crazy to me because you've been in the market for like 10 plus years. Is it going on 15? Going on 15 years. Nothing really clicked to the point where you could consistently make money. Went into crypto, experienced the volatility, and then come back and made $500,000. Like what? Like what happened? Like how did you do it? Like it cannot just be the objectivity, or is it that you could just be completely objective? But like what? How did it click this time?
Yeah, good question. I think there was a lot of growth, in the first decade. and I'm just constantly, learning more about myself. I think a lot of it, what clicked for me was really being able to get my psychology down. I think
Yeah.
fear is a really bad place to be. It's just a bad emotion to have when you're trading. And if you can get into a place to trade without the fear, you can really do some damage, I think. Um, and so actually journaling my trading helped a lot because it allowed me to really look at what I've been doing wrong and really face that head on. And I was clearly doing a lot of things wrong in the past.
Yeah.
So yeah, honestly, like the strategies that I employ these days, they're not very different from the strategies I used to trade with. I'm very familiar with these strategies because it's been a long time, but the main difference is like how I'm approaching them methodically and also like just recognizing it different in what environment we're in markets.
Mm, yeah.
I
It's a big
see
one.
being in crypto helped me kind of identify like what's the market sentiment and um I'll talk a little bit about this when we get into the strategies, but yeah, it helps me to like break up the years into sections and kind of figure out what environment I trade well in and when I don't trade well and just try to optimize for those times.
Yeah, like everything that you're saying makes complete sense to me as well, because I think when you first start trading those initial few years, you're so zoomed in on like getting it right and getting the pattern perfect, but you're so emotional all of the time. And then you find a pattern that works and you start making money and you're so excited. But then the pattern stops working because the market conditions change. But you're so emotional that you can't react objectively to the change because you're just so like, no, it has to work, it has to work. Do you know what I mean? No,
Yep.
the pattern doesn't work anymore. What do I do? And you panic. But it sounds to me that you've just learned to pull back, not have the emotions, and then because you're not stressed. But when anyone's stressed, they react badly. Like if you ever see a cat when it's stressed reacts in the most horrible way. And it's if you can just be objective, you can see things more clearly. You can see changes before they happen. Because how many traders make 3 months green and then they just lose it all? Like
Yeah,
if you traded it without emotion, would you have lost it all in the fourth month, or would you have thought, no, the market's changing, I need to do something?
absolutely.
And
Yeah,
so
100%.
because I watch traders recaps who make millions of dollars, and they all do the same thing that I was doing. I just couldn't do it. But if you want to go into your charts, I'd be curious to see if you can show me your profit curve on Kinfo and share screen. I'd be very curious to talk a little bit through your performance. But it's refreshing for anybody who's been trading 5 years, trading 8 years, trading 10 years, not made it. If it
Yeah,
it's just the time it takes to mature and not mature, but manage your emotions.
yeah. Let me pull this up. There are two big takeaways I got when I got onto Kinfo and actually just looked at this. And it was one of them was my portfolio stop loss, what I call my portfolio stop loss. And uh just my portfolio stop loss working. And it's visually very apparent once you look at this chart. So that that part of my strategy is if I lose 10 to 15 or maximum 20% of my portfolio value,
Mm.
I liquidate everything and I stop trading altogether. Doesn't matter why I did it, why it happened. I just do that and I stop trading for a few days or a couple weeks.
Yeah.
And um I wanted to highlight those because this last year in July was a pretty actually the first time I really did it was in April of 2024, and you can see I had a big drop off here,
Yeah.
and it just flatlined because I stopped myself out. And after that, it I proceeded to come back with a fresh mind and was able to make new highs, right? And then from those new highs, I had another big drop and flatlined, and I was able to come back with a fresh mind again, and almost doubled my profits from the low. And I think this was it was really nice to see this because it really showed me how, if in my past, as I told you, I would round trip a lot of my gains, and it's because I didn't have this mechanism in place. Um, and it was just such a stark change because I kind of look at trading as a sport. I think it's very analogous to sports. I really like basketball, so I'll use that as my analogy. But I think in sports, they always say defense wins games, defense wins championships, and in trading, defense, the way I see it is you're trying to protect your capital from yourself. Like we are our own worst enemies a lot of times because no one's making you lose money, right? There's no one like blocking your trades or anything. You can do whatever you want, but um, a lot of traders like me in the beginning, we come into it without defense, and we don't realize that we're actually our own worst enemy. It's not the Wall Street institutions hunting your stops. It's not some algo trader out there, right? Those are not your opponents. Really, you're trying to um, optimize what you do best to make the most profit, but also protect your capital from yourself when you're not doing well. Um, so yeah, I had several times when I stopped out here, here, um, here. This was a big one, and then each one of those proceeded with me just making new highs. And yeah, that's one of the key takeaways I had from this. Um, Another key takeaway is scaling for me. When when my portfolio started going up a lot here, scaling kind of became an issue for me mentally. When you double or triple your account, it's kind of like, do I start doubling and tripling my position sizes as well? And I'm still human, so it's like I know people always say like trade based on percentages, but it's still hard to see like your portfolio fluctuate from hundreds to thousands to tens of thousands within the days and weeks. So um yeah, this th- um currently you can see I'm sort of in a consolidating period. And I think the last 5 months this year, it's really been a issue for me trying to get down my scaling. This big loss here in January that I took, it was one trade. It was it was one trade in I think MSTX, and I just went way too large in size, and I took a big loss. I stopped myself out. Actually, kind of too late. I think this was more than 10% of my portfolio, maybe. And so since then, I've been slowly grinding back up. But yeah, I'm kind of in that phase of just I'm just constantly learning, like where's my risk tolerance and getting comfortable with the size.
Yeah, no, I've got two questions for you. The first one is like, how do you have the mental strength to do 4 months without making any money? Because that's where a lot of people go wrong. They think, "Ah, I'm not making money for a few months. I'm not a good trader anymore. It doesn't work anymore." But then you're always just behind 100K a month or 100K in a few months. So how do you have the resilience to have the faith in your system?
Um, Good question. So before I went full time, I made sure I had a pretty good buffer, in our savings, and um, I knew that trading isn't gonna be like every day I make money or every month I make money. Um, so there is like having the buffer allows me to still live a normal life without kind of like freaking out about paying bills. But also, I'm I would say I'm pretty competitive uh
Yeah.
in general. So I play basketball and I am pretty competitive there. And um there's a part of me that for whatever reason I just trust that my system's gonna work. And because I think I've proven it enough to know that over time it will work. But there will be times when I'm gonna take drawdowns, and uh, I think when I look back at my trading um history, it's most of my drawdowns are due to mistakes. It's me not stopping myself out, or it's me using too big of a size. And so I I I think I just trust the strategy because I know it's a strategy that makes money. It's really me. The theme is me just working on myself.
Yeah, no, 100% understand. And we're all, I mean, when you think about it, we all work on ourselves our entire lives. Everyone's quest is to be a better version of themselves every day. Uh,
Yeah.
I don't want to go too deep, but like that's how we're built. I mean, as humans, that's how we're built because if we weren't built always wanting to be better, we'd just get fat and lazy and be extinct. So it's just this is how we're built. But can you tell me about those crazy days? Like that's one trade in March 13, I think. March 13 looks like a crazy trade. November 23 went on that run.
Mhm.
What what happened there? Like, and how did you learn this? How did you find your edge? What are these trades?
Yeah. You mean here?
Yeah, like what was that? That's one trade, no? Is that an options trade?
Yeah. Yeah. So this was SMCI, and this was, if you remember last year, SMCI Supermicro went parabolic. Um, and I was riding the momentum, and I just bought calls, and it was kind of a lucky trade because I bought calls on like Thursday or Friday, and then that next week, that weekend, they announced they added SMCI to S&P 500, and on Monday it opened really high, and
Did you
so
this? Did you have a
I had no
feeling?
idea. No,
Joe?
no, I literally was just it was just a textbook like trade for me, momentum trade for me, and I would say that that's kind of the case for most of my quote unquote home runs. Most of them are just textbook trades that I never expect them to be home runs. They're they just happen to be like a base hit type of normal trade that ends up working out really well. Um, so most of my trading is just this like grinding higher sort of thing. And last year, I think the second half of the year was just crazy. So my normal trades, they just ended up performing really well because of the election. Um, I can kind of go into like if you want me to, I can like go into these bigger ups and downs because I did go back and look at them to see what what trades
So as well, absolutely. If you have a couple of charts as well, if you can throw a couple of, I'm just curious, like how you trade, how you form the thesis, what you're thinking about, maybe one example of a pattern or something like that. Because like,
Yeah. Okay, let me stop sharing.
especially with the options side of things, because a lot of people will be curious about options because of the volatility in them.
Right.
Like if you'd have bought HIMS, HIMS, you'll know. Do you know HIMS?
Oh yeah.
Like I was long in that a while because I bought that dip a while and I was thinking, I don't want to cut this, I don't want to cut this, and then it's just it looked like it was never going to bounce, and now it's going to go to all-time highs. And you just think, how did that happen?
I know.
If you had calls on that, I wouldn't like to think.
For hymns, I don't believe I bought calls. I think I bought shares. For that one. Hold on one sec. I'm
That's
just
it.
trying.
Go for it. But what was your thought on HIMS? I want to know if it was similar to mine.
Hymns when it took that huge drop, in March or April,
Yeah.
I already started getting bullish on it, but there was the whole tariff stuff happening, right? And um, for the most part, I'd say in April, I was trading more shares than options because, or if I did trade options, it was like shorting options, so shorting puts or shorting calls against my shares because I knew there was going to be a lot of volatility with the tariff stuff happening, and um it's way easier to just hold on when you're holding shares, right? Um so in terms of strategy, I want to share maybe two main strategies that I employ. One of them is the pre-earnings rallies, and I love this for just buying call options. I think so. For options trading, the hardest part about it is if you're going to go long options, you need to time it correctly, right? Because there is an expiration, there's theta decay, and the other part is there's IV, there's volatility component to the options pricing. So if the volatility drops over time, your options value will drop over time with it, even if the stock price goes slightly up or sideways, right? So if you're buying calls or buying puts, you need that move up or down to happen pretty soon or way sooner than your expiration, right?
Yeah.
So um I'm pretty comfortable sharing this strategy. I think people get afraid of like sharing strategies because they think the edge will go away, but
Yeah.
um this is one of those things where I don't think the edge will ever like this is a phenomenon that I think will always happen. Just due to market greed and just how hype works. Which is something I really became in tune with hype and like taking advantage of hype when I was in crypto. So there are only a few things in the market that are certain, and one of them is earnings. Earnings will always happen every quarter, right? And the Mag 7 earnings are the biggest. It's kind of like the crescendo of earnings season.
Mm.
And so I break up my year of trading into basically four parts. It's just all based on earnings. So when I think about these swing trades that I make, I'm always thinking about where are we in relation to the previous earnings and the earnings coming up, right? And one of my main strategies to is recognizing that the few weeks to a month prior to an earnings for Mag 7 or a really strong momentum stock, usually the stock will go up. The magnitude is random, but usually it trends upward into earnings because people don't want to be shorting it, or they're just getting hyped because her previous earnings were really good. So, um, so for options, you have a lot of benefits when you can when you know an earnings is coming, because you can buy the contract that's expiring the right after earnings. That protects you on the IV side, on the volatility side, because volatility increases as we get closer and closer to earnings.
Yeah.
Um, and you definitely want to buy the contract expiring after earnings. Um, and then you also get the positive drift component, and that increase in volatility as time goes by also helps to offset the theta decay on those contracts. So the time value on those contracts kind of get offset. Um, um, so yeah.
Is that by the
So I'll
IV? So the theta will always decay the closer you get to the earnings, right? But it's the implied volatility will increase. Is that right? Because
yeah,
it's getting more volatile in the run up. So that kind of stays flat because one offsets the other.
yeah,
Is that
exactly.
right? Is that what you're saying? Yeah, yeah, it makes sense to us.
Yeah. So I pretty much just try to take advantage of that fact. And so if you look at like Microsoft used to be my favorite stock to do this in, a pre-earnings rally trade. But lately it has not done it as well. But I'm always tracking it, and I'll just kind of expand this to see. So these boxes that I draw, this is the 4-week period prior to the earnings calls. Okay.
Nice.
So you can tell in the last 4 earnings, it didn't really give us a good, like, clear pre-earnings rally. So I actually stopped trading Microsoft, but I want to use this as an example because, um, so for here, like this earnings in January 2024, you can tell that, the month or two prior to, uh, so earnings is right here.
Mm.
And this was the move in the prior 4 weeks of earnings. But prior to that, after the previous earnings, you did have a run up, but you also had just like sideways, right? So if you're gonna buy a call and you end up buying a call here, this entire time when it's sideways, you're gonna be losing money
Yeah.
because you don't
The IV.
when you're in the call
The
theta.
theta, sorry. The theta and the IV together will not make money.
Yeah, exactly. So if you want to buy a call, you want to get in right around here or around here. So, um, this was a good trade. I think this was part of my January. Yeah, my January spike up. I was trading those earnings, and you can tell right after earnings are released, it's just a completely random event, right?
Yeah.
And I always sell before the actual earnings calls because there's no point for me to participate in anything afterwards. It
Yeah.
can
Gamble.
it can spike up and keep going like this. I missed this whole thing, but that's just not where my playground is, right?
But
I'm trying to find this is where
your
if
sorry, your expiration is after the earnings, but you normally sell the contracts before.
correct.
All right. So do you put the expiration after the earnings just because the IV will be higher or
Yeah.
uh,
It rotates IV and the theta decay also just doesn't get as affected.
but you're always not going to gamble on the earnings even though the expirations are there. You just
I if I'm I will never go long calls into earnings. If I do an actual earnings trade and hold it through earnings, it'll be probably a short put,
yeah.
or I'm holding shares kind of more long term. But yeah, I never hold through earnings. I'm actually usually selling way before the earnings. So even though the the rally here was pretty big, I probably only caught half of this. Um, and that's good enough for me because in options you have a lot of leverage. So if you just catch like even in Microsoft, if you catch like a 10-point move, that's like 100, 200% on the options trade.
Yeah, no, it makes. I'm just asking questions for people that don't know options. I know options a bit, but not. I've never traded them, but I'm just thinking. But I think everyone should be able to more or less understand it so far. But you have to set a price, a price that it will reach for your option not to expire worthless, right?
Sorry, can you repeat that?
Sorry, when you're making a call, is there a price it needs to get to still, or it's just literally taking the trade with leverage?
Oh, good question. It doesn't have to get to like your strike price or anything.
Yeah,
Most people who trade earnings, they don't hold it to maturity or expiration. Usually you're just trading off the price of the call. So if the price of the stock goes up, the price of the call will likewise go up, just in a much larger percentage, because it's each one call option or put option is controlling 100 shares
yeah,
essentially. So for Microsoft, one call option might be like $500, right?
yeah,
But it's controlling 100 shares. So if Microsoft itself goes up $5, um, your call option is gonna go up $5, which is $500, and that's 100% gain. So it's a really basic example. So
does the strike price matter then? Do you care about the strike price, or do you just have to put one in as a formality?
the strike price does matter, and that gets into kind of more of the mechanics and technical details of options. Um, like if you're buying an option where the strike price is above the current price, then you're buying an out of the money
Yeah,
option. And those generally give you the biggest percentage gains, but they're also the riskiest,
yeah, you're right.
because all options that trade out of money during expiration expire worthless,
Yeah,
just at zero, right? So if you're buying an out of the money option, you are taking a huge bet that the price is going to go up very soon, right? It doesn't have to get to that strike price, because as long as it goes up in like a quick fashion, you'll still be able to sell it for a profit.
yeah,
But something I also track is like options order flows and options exposures. And so one of the things you can look at to determine where institutions and like whales are positioning themselves is, if you see a huge order, like 10, 20, $30 million call option, out of the money call option order on like a stock like Tesla, you know somebody is betting big on that stock moving up. Because if they're doing it in out of money, they need that stock to go up. So um that's usually like when you see big orders like that, um you'll see some movement in the stock.
yeah. No, that all makes sense to us. So you're kind of looking for what the hedge funds are doing to follow them, thinking that someone's onto a good idea. They know why. I don't know why, but I know that they know something, so I might follow that.
Yeah,
Yeah,
exactly. Um so yeah, that's an example of the pre-earnings trades. And I'd say one of the things that has been important in my maturity or my growth in trading is sort of recognizing that different stocks have different personalities, right? Not every stock will have a pre-earnings rally, like personality. A lot of them don't care at all, actually. And some stocks will also change over time, like Microsoft doesn't really do it anymore. Um, but a part of my research is finding stocks that have started to show that they're going to start doing it. And um, one of the one of them has been Palantir. I'll kind of show Palantir. So for a while before, Palantir didn't really like exhibit that. Like if you look at even January 2024, it kind of just went sideways into earnings, and then it popped up. right? And the more of these you get, the more positive surprises you get, the more traders start to remember that, oh yeah, this is a strong stock, or this stock is making money, right? They're constantly beating earnings. Same thing here, it kind of popped up. And so the last three earnings we saw the pre-earnings rally trade actually be pretty good. And so this past earnings, that's what I did. I traded Palantir a lot long prior to earnings, and it was a pretty good run, despite the tariff talks.
Yeah. Now
Um,
was that last earnings period before this one. I don't know if it was like Q4.
yeah,
Was that a gap up on earnings?
it
Was
was.
that so whenever you see that gap up on earnings, I can imagine the psychology of every single person on earth who knows about Peloton is like, I'm gonna hit in early for the next one. So you're gonna, and because you got a really, really nice run, you got a really nice run at the earnings in the next quarter as a result of the previous quarter having that gap. Would you say?
Sorry, can you repeat
Say
that?
that the previous quarter's earnings had a very, very nice gap up because the earnings must have been really good for the market. Do you think does that create the next rally in the run up to the next earnings because people want to get in on the next move early?
Yeah, 100%. I think that's exactly what's causing these pre-earnings rallies is when you have a company that's constantly making profits, that's beating expectations, especially after a dip, right?
Yeah,
Palan's
exactly.
from 125 down 50%, right? So, and what I'll say is like another reason I focus on earnings is so much is because earnings season has this, it's almost like this magical effect on the markets where it doesn't really matter what's happening in the world, just geopolitical tensions, war, tariffs, all that. People, the market just tends to ignore everything and focus on these earnings.
Yeah.
It's like this little capsule in the market, and that's the environment I love to trade in. Um, and back in February, I actually started getting short the market because all the tariff talks were coming. Trump just got inaugurated, and inflation data was bad. Rates seem to not be, lowering. So, but despite all that, the market continued to rally halfway through February. And it didn't really, like if you look at the S&P, it didn't really drop until after the final Mag 7 reported earnings, which was Nvidia. Okay. Um, if you look at Nvidia, which I think was like March 27th, March 26th.
Yeah.
Up until then, like the market didn't really like drop. But after Nvidia reported earnings, that's when like everything started tanking. And I really do attribute that to the fact that earnings just has this magic. Um,
Yeah. I see what you're saying.
yeah, and yeah, these gaps I'm always missing. So I got out obviously before this gap. I missed it. But at the same time, it can gap down, right?
Yeah.
And so yeah, this is one of my favorite strategies because it's much more predictable to get this run than to try to catch something after earnings.
Yeah. And this is just a single leg option, right? You're not doing any complex option. It's just a single leg
Y-
call.
Yeah, it can be calls. It could be just long shares.
Right.
I have been trading the leveraged ETF shares a lot more. Or it could be short puts. So like the idea is for me is just in this period, I'm going along in some way or fashion. Right.
Is there an
So
ETF for every stock though? Is there an ETF for PLTR and Tesla and they have ETFs that double and triple the volatility for you?
yeah. So Palantir has two. leveraged long. It's PLTU,
Uh,
and then PTIR. PTIR is a larger dollar value stock, but it does have it has options. PLTU doesn't have options that trade for it. So I like trading PTIR more because if I'm going long the shares, I can at least sell calls against it if I'm wrong and collect a premium on that. But yeah, so a lot of my trading is that, and the second strategy is one that I actually haven't really employed lately. It's called the squeeze. It's an indicator that I believe John Carter developed really early on in my trading career. I think maybe over 10 years ago, 15 years ago. And the squeeze essentially it's this indicator here. Um it's essentially, let me see, I don't think Palantir is a good one for this. I believe it was Hood. Yeah. So the squeeze indicator is trying to identify times when the stock is consolidating. And the longer, and so these red dots here, they're just it's indicating like it's in a consolidating period. It's in like a tight range.
yeah.
And this is the best time to get into the stock. Now the squeeze indicator doesn't tell you what direction it's gonna go. It could break out upwards or downwards. But I use this a lot to just identify times that I want to get in. So Robinhood had kind of a textbook trade here back in December where he just went sideways, and then when the squeeze, quote unquote, what he calls fires, that's when it breaks out. So when it turns green, that's when it fires, and we had a pretty good move on this one. And this one was paired with a pre-earnings rally, if you can see.
Yeah.
So it was kind of like a confluence of two of my favorite strategies. Um, and yeah, so Robinhood is actually another good candidate lately for these pre-earnings
Nice.
rallies.
Would you say that is there much difference do you find with uh trading these pre-earnings rallies on options compared to stock other than the leverage that you get? Because are you scoring more on the IV, and is it more beneficial? Do you make more on options than stocks or?
Yeah, it's hit and miss. I would say it's generally easier to hold on uh if you're holding shares. With call options, it's a lot less forgiving. So, for example, like if you had, let's zoom into this. If you kind of saw this happening, it broke out, right? If you bought calls right here, like kind of at a local top, and it kind of drops, your option value in this one drop will probably decrease about 50%, right? Even though on the chart itself, it doesn't look like much. So you need to be able to stomach those types of things because it can come back in a big way, right? Even this day, like it gapped down and you probably would have seen a big 50-60% drop in your. So if you're holding shares, it's a lot easier to just hold on for a larger portion of the rally.
But there's no advantage other than managing emotions. Stocks versus options, you don't gain from another way. Because I know options has the different criterias.
Yeah, options is just more leverage.
That's mostly it in terms of profit and loss.
Um, yeah, I'd say so.
Oh, okay. So for a lot of equities traders that can, you've certainly put me onto something because I've been trading a lot of like that whole dip when Trump did the tariffs and the trade war. Like I didn't think America was going to end forever, so I bought the dip on most of the Magnificent Seven, and on the news of this won't go out the same day, but on the news that China's just made the trade deal with the USA and everything's just
Oh yeah.
ramped up massive. Like that made me a nice amount of money today, and I
Yeah.
started doing that, but I was thinking, okay, well, Trump's not going to destroy the economy and then rebuild it again. Do you know what I mean? That's not going to happen
Yeah.
more than once. That's a one-off thing in the lifetime. So I was thinking, how else do I continue to trade these kinds of stocks? Because I work a lot. Like for you, I don't know how much free time you have, but this style of trading will not take 10 hours every day, right? Or
Right.
does it? Or does it? I don't know.
Um, well, this is like one of the
Uh,
main strategies I do for swing trading, but I do day trade.
yeah.
Um, and if I day trade, it's usually with options, and it's usually with like S&P or futures um on the E-mini stock, E-mini ticker or something.
Yeah.
Oh,
Yeah.
that's like a whole that's a completely different strategy though.
But
Which yeah.
so which is making you the most money from the earnings plays to futures to options?
It's definitely options make the majority of my profits, and I'd say the swing trades make majority of my profits. Um, for a good amount of time, I was only trading actually pre-earnings rallies. Like I would trade the pre-earnings, and then once our earnings season happens, I'm out, and I would just stop trading for 2 months.
Well,
This was when I was in full time, and then when about a month prior to earnings, I'd come back and kind of assess, okay, what do I want to buy, ride that rally, and then get out again. So yeah, day trading is something I actually only started doing in like maybe the last 8 months.
wow.
Um, and I'm still sort of getting a hang of it, honestly, because I was trading like zero DTE.
Yeah, I've heard about these.
Option, right? And it was always just like one contract at a time though. But I realized after like kind of journaling and tracking like which like what's working and what isn't, zero DTs were not working for me. But if I traded even just like 3 or 5 data expiration options, my success rate went up a lot. Just because I had more time and the value of the option didn't didn't go to zero by the end of the day. So that's what I started doing. I started trading SPY calls and puts 3 or 5 days out. And that's been working a lot more. And for day trading, I use a lot of options exposures like gamma exposure, delta exposures. And yeah, that's it's pretty technical with those. But
Yeah, no. So I'm telling you now after meeting you now, it's come at a weird time. It's like it's funny how these things happen. I'm definitely gonna look into earnings plays more. I work all the time, so it's like I don't really have much time, but definitely those earnings plays I'm gonna start looking into a little bit more. So thank you for sharing that. You've helped one person for sure, but I'm sure you've helped a lot more. But final question for me is like how did you get into this? How did you learn this and how could someone new start learning this?
you mean options or
Yeah, like when you talk about the gamma related strategies, I mean, it sounds crazy to me, and I don't know many people who are teaching it. So, is that from your background in finance or?
yeah, it's something it took me a while to learn options and like options it's a beautiful product. The world of options, you can get as deep as you want and as like academic as you want. But at the same time, if you don't, you can still like do some damage trading. But I initially learned from John Carter, actually, the guy who created the squeeze indicator. This was over 10 years ago, and um, I paid for the service to just be in his trading room, and I would just watch him do his thing. And I remember like he had this epic trade, which I think is on YouTube. He had a huge like $1 million day trade on Tesla, just with options. And he just showed like how to use the squeeze indicator in relation and like all that. So I learned a lot of options trading from him. I learned a lot from Tasty Trade. Tasty Trade is a big think tank in the options trading world. They do a lot of research that they give for free just on their website and YouTube. So I highly recommend that. Um, I will say that most options traders like me, they get into it just wanting to buy calls and puts because you see those 100,000% gains and you're like, I want that. Right? You're kind of like getting this penny stock sort of behavior for a stock like Microsoft, right? But um it's really important to recognize like Tasty Trade calls it probability of profit. And when you're buying a call, the probability of that option being profitable is not, it's not 50-50 like it is with buying shares. Like it's not just price goes up in the stock, your option goes up. Because if it doesn't go up fast enough, your option actually just loses value. So the only way to earn money trading long calls is you need the stock to go up and go up quick. That ends up giving you like a probability of profit of like 30% if you're going long calls. But if you're going short, if you're gonna like short options, the probability of those being profitable is much higher because you can make money if the stock goes sideways, goes up, or even goes slightly against you. You can still, like, as long as it stays above or below your strike price, you can still make money. You just kind of cap your max profit potential. But even though I said I go long calls, a lot of my profits just day to day, it's just short options. I'm shorting to collect some premium. And when I looked back at my 2024 performance, a huge, I'd say like 40% of my profits were just shorting options, shorting puts or shorting calls. And that it's not really gonna like show, those huge spikes.
Yeah.
But like when you see me grinding higher and higher, it's usually because I'm shorting options, and that kind of gives you an edge in options trading. But um the the downside to shorting options is you need more capital to do it. So it's not like just buying a $500 call for Microsoft. You actually, if you're shorting a put on Microsoft, you need like a lot of money, a lot of cash to like cover the 100 shares.
Potential
Oh.
massive loss. Yeah, no, it's funny with options. It seems like it's, I suppose you can short for premium to pick up small amounts of money because most won't move, and then you're looking for that needle in the haystack where you think that that's going to be the one that can go, and that brings us back to Hims at the end, Hims and his. That was one of those stocks where you thought it's a matter of days or weeks before this has a bounce. And then and I don't know how well you look into the stocks, but I remember it lost its partner. It was through a loophole selling the GLP-1 drug. Through a loophole, it was selling the obesity drug, but then the loophole closed. So obviously, it was going to get a. It was a matter of time until it got another supplier, like a Wegovy or an Ozempic or a. I forgot the names of the other ones. Yeah, Monjaro. So, like, would that be the type of stock you take a call for, like waiting for the news, but you don't know when the news is going to come, or
Um, it
it's better to just go look into it.
Yeah, that in that scenario, I would not buy calls before the news. Sorry. Um, Generally, if I'm buying calls, I'm buying into momentum. So I'm not buying reversals. Reversals are really good for selling puts, or like buying shares, but you will get killed in the chop if you're
Yeah.
just going long calls, because it's just, you have no idea when it's gonna move, right? Generally it's after like it's already made some move and it broke out above some local high that I'll buy into that momentum. So yeah, yeah.
That's pretty much it. No, it's been a really interesting chat with you. I think we haven't really had any options traders on or people explaining options related strategy. So I think this will have its own little place on being very valuable to the community. So I really appreciate your time. I thought your insights were fantastic. Um, any final words to close out?
Um, yeah, no, I really appreciate this opportunity. I love what you're doing at Kinfo, and actually, I've watched many of the interviews of the previous traders, and it's really interesting to like see what other people trade and how they trade, and like there's so many different ways to like profit in this market. And I do want to shout out like one of my favorite interviews you had recently was Rob Booker.
Yeah,
um and I resonated with him a lot because he was talking about how like if you're looking at a successful trader, look at how they lose money. um
yeah.
not how they make their big wins, but like how do they lose, because the biggest part about it, like longevity in trading, is to not give it all back, right? And that's pretty much the story of my journey. Just don't give it all back.
No, but Rob Bogo was a really, really cool guy and really, really great guy to have on. Yeah. But the best thing that I like about these, and I think what makes this different, what I see these numbers on the podcast are going up as well, so more people are starting to watch. But I think the reason it has an appeal is because you know for a fact that the person saying what he's trading and how much money he's making is real. So you can judge for yourself and give weight to how much do you want to believe this guy's advice based on how much you find success in his track record and how stable his track record is. So if someone's been trading for 5 years and they've made X amount of money, you know that it's not luck because over 5 years they've successfully made that much money. But if you've got a trader who's made $200,000, but they've only done it in 6 months, you're like, oh well, and it's just like that. He's like, oh, well, this guy could very quickly lose that money. So look, he's verified,
Absolutely.
so he's worth speaking to. But the person listening can make the judgment on how much weight they want to give to that person's advice based on the profit chart and how long they did it for and how long they've been profitable for. So it's
100%.
really good.
Yeah, it's great. I don't know anyone else kind of doing this in the market, like in the journaling realm. So it's really cool.
Thank you. Really, really appreciate it. Really, really appreciate your time. Thank you for being transparent. And I'll see you again.
All right, thank you.